The latest in a long line of write-downs on the wine business has sent Foster's into the red. Full-year net loss came in at almost $500 million. Despite renewed takeover speculation, Foster's is refusing to comment. Frances Bell reports.
Foster's boss Ian Johnston is not denying it's been yet another difficult year for the beverages giant, but he was playing up the positives during a presentation to analysts in Melbourne.
Last year, people were saying, what's happening at Foster's? This year, it's more like, look what's happening at Foster's.
But it was impossible to avoid the headline figure, a full-year net loss of more than $460 million, a big fall from last year's profit of $438 million. That was largely because of a previously flagged write-down of the group's underperforming wine assets to the tune of $1.3 billion pre-tax. Excluding the losses, the net profit was close to $700 million. But there could be more pain ahead for shareholders.
I don't think we can discount fully any further write-downs, given there are still a significant amount of intangible assets held on the balance sheet for the wine business.
Foster's says the wine business is better run now that it's structurally separated from the beer division, and wine earnings were up strongly in the second half. But Ian Johnston had a familiar warning about the challenges ahead.
We do expect market conditions in the wine category to remain mixed, with oversupply in the Australian market, a subdued consumer environment in key overseas markets, and the strength of the Australian dollar expected to have an ongoing impact.
That's a problem worldwide, and that oversupply is really taking its time to get through the system. So those headwinds still look like they're going to be facing Foster's for the time being.
Foster's better performing beer division, Carlton and United Breweries, recorded earnings growth of 5% for the year. But food and beverages analyst Andy Bowley says the division is still not performing as well as it should be.
They're now holding a market share of around 50%, but that's down from around 55% 5 years ago. So fundamentally, brand health metrics are not as good as they possibly should be.
Ian Johnston says Foster's plan to demerge its wine and beer businesses is on track, and depending on board approval, it should be put to shareholders before the middle of next year. But he refused to comment on the latest takeover speculation surrounding the beer division, this time naming brewing giant SAB Miller as the suitor.
There's been a lot of bid speculation on the Foster's beer business for a number of years, and nothing thus far has eventuated. But a demerger process and a full split of beer and wine makes beer a much more attractive proposition for would-be acquirers.
Despite the full-year loss, Foster's still plans to pay a dividend, but that requires shareholder approval to change the company's constitution. A resolution will be proposed at the group's AGM in October.